Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of USDjpy, US dollar Japanese yen. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis. And do not forget to check out the Forex analysis playlist on my YouTube channel for the analysis of other currency pairs. So let's get started. So this is the 4 hours chart of US dollar Japanese yen. Yes, my favorite 4 hours time frame. And if you have watched my yesterday's video on USDjpy, then hopefully you earn a good profit right now, because I recommended a strong buy at this particular support level when market bounced from this trend line. Okay. I clearly mentioned in my previous video that market is following this trend line as a support, and this is the best trading opportunity or the best trading spot right now. Okay. So let's do the analysis first. So if you look at the chart, then there is no doubt that market is in uptrend, and market is in uptrend. So if we consider the overall trend of the market, then it's towards the upside, and whenever a market is in uptrend, we should only look for buying opportunity. It's not it? Yes, this is a thumb rule, guys. This is a thumb rule. We should always look for buying opportunity in an uptrend market, and we should mainly look for selling opportunity in a downtrend market. So USDjpy is an uptrend. Therefore, following the thumb rule, we should mainly look for buying opportunities. And the second thing that we always need to focus is the area of value. Okay. The area of value means the best trading opportunity or the best trading spot. As I have already mentioned hundreds and hundreds of times in my videos, that in an uptrend market, the area of value or the best trading opportunity is always near the support. Whereas in a downtrend market, the best area of value or the best trading opportunity to short the market is at the resistance. And USDjpy, as you can clearly see on the chart, that it is an uptrend. Therefore, the area of value is near the support. And in this case, we can clearly see on the chart that market is following this trend line as the support. Therefore, we have a clear area of value in front of us right now. And see, right now, if you're thinking that market has reached this particular level and you can short the market, then do not do it, because see, right now market isn't uptrend. The trend of the market is towards the upside. Means the market is being dominated by buyers. And remember one thing, there is a resistance. That does not means that this is a concrete level. Okay, this may get broken also, because if a market is being dominated by buyers right now, then there is a possibility that at one point of time buyers will break this level. Therefore, do not take risks, do not go against the trend. If I take you to the Forex sentiment meter, you can see that this is the US dollar Japanese yen, and this is the sentiment meter of the retail traders. And my dear friends, you can see that USDjpy, as you can see, in this uptrend market, 76% retail traders have short the market, whereas only 24% traders have taken long position in US dollar Japanese yen. And you can clearly see on the chart that US dollar Japanese yen, USDjpy is an uptrend, and they have taken trade against the trend. And this is the main reason retail traders, 90% retail traders lose money. 90% retail traders lose money because they do not follow the thumb rule. They do not follow the trend. So they have taken a position against the trend. They have shorted the market. As a result, they are in loss. And as you can see, almost all the retail traders are the average. Okay, average, they are down by minus 246 pips. Huge. Okay, therefore you should always follow the trend. This is the main reason I always shout that follow the trend, follow the trend. Okay. And in an uptrend market, do not think about shorting the market. You will get trapped. Suppose this at this particular point, okay, though right now stochastic RSI is indicating that market is in overbought zone, but still a big volume may come and market may go up. In that case, your stop loss will hit and you will be in loss. Therefore, do not short the market. And in this type of market, you need to have patience and wait for the perfect opportunity. If you have missed the yesterday's opportunity, then you need to wait for the market to come down to this support level again. In your trading platform, in your charting software, in the 4 hours time frame, or you can also switch to the 1 hour time frame also, just draw a trend line like this and wait for the US dollar Japanese yen to come down to the support level. It may take 1 day or 2 days, does not matter, but this is the best grabbing spot of US dollar Japanese yen. Once it comes down to this particular support level, then just observe the price. As I've already mentioned, these resistance and support levels are not permanent, they are temporary. Therefore, when market will reach the support level, just observe the price and see how the price reacts. If you see that just like previous times, market is taking support or the trend line is providing the required support to the market, then you can go for a buy order. Once you see the confirmation will be in the form of a hammer, price rejection from below, or a green candle like this. Once you get a confirmation that yes, buyers are sitting at this level, buyers are serious about the market in taking the market upward, then you can go for buy order at the support level. And do not think about shorting the market here, because see, the market is under the dominance of buyers, which just try to understand the market emotion here. Okay, let's assume that right now 100 people are present in the market. Okay, market is in uptrend, which means that 65% are buyers and 35 are sellers. Okay, so the probability of market going upside is much high, because the number of buyers are high and the number of sellers are less. Therefore, you should not short the market in a position like this. Though market is standing at a resistance, though stochastic RSI is standing at the overbought zone, but still the market is under the dominance of the buyers. Therefore, you should not short the market, because the number of buyers are more in comparison to the number of sellers. Do not think about the retail traders. Okay, they always take, most of the retail traders take bad position. As a result, 90% of them lose money. Therefore, be a wise trader, be a patient trader, be a trader, not be a gambler. Wait for the perfect opportunity and do not trade in the middle, because if you trade in the middle, then your risk to reward ratio will not match. And as I always say, never ever compromise with the trading discipline. Trading discipline is the only thing that that differentiates a trader and a gambler. Therefore, do not compromise with a trading discipline and do not trade here in the middle, because your risk to reward ratio will not match. Wait for the perfect opportunity, then only go for it. Because see, patience always pays. That's it. I'll not say anything more. Wait. Hopefully you've understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See you tomorrow.